The Blackrock World Mining Trust has a very clear objective, which is to deliver a superior total return through the cycle by being invested in shares of companies producing commodities, specifically mining companies. The Blackrock World Mining Trust doesn't really have a peer group. It is the only investment trust that focuses in on the mining sector, and so it's not really, there isn't really anything to look at when thinking about this space in terms of direct comparables. In terms of the investment process, it's very clear. We are always looking for value, and we're always looking for value to drive that total return objective that we have from investing in securities of companies through the normal investment cycle. The resources space is incredibly cyclical, and so we will go through periods of high excitement and strong returns and periods of weakness, a little bit like the kind of boom bust cycles attached to many political decisions. We invest predominantly in the publicly listed securities of mining companies, but we also have the flexibility to own resource company debt, to invest in royalties, to use options, to use leverage in the portfolio as well, but also to invest in private companies. And we make use of all of these tools. The mining trust is run by the team here at Blackrock, and we are all very long in the tooth now. I've been doing this job for about 28 years, and so we have incredible connections throughout the industry. And so ideas come from a variety of different sources. Ideas can come from meeting industry contacts, meeting companies, management teams, meeting people on the sell side who are doing the research, going out and visiting assets on the ground and seeing the mines in the flesh as part of our kind of due diligence process. And ideas come from all of these different types of encounters. They also come from our colleagues at Blackrock. We have an amazing array of very talented people that we work with. And those people generate ideas to do with macro. If we're thinking about China, we're thinking about global demand for commodities, to thinking about political risk, and so on. So ideas can come from all over the place, and what our job is to try and capture as many of them that are going to generate value for the trust. Yeah, we've been through an incredibly strong period for the trust. After the kind of the peak of the last cycle in 2011, there was a 5-year downturn where resource companies had to try and get their act together, repair their balance sheets, and rebuild trust with investors. Ever since then, it's been a very strong bull market. So numbers are very positive indeed. Over the 1 year through to the end of October of 2021, the total return of the trust is around 47% versus the broader UK market, the FTSE All Share, of about 35%. But over 3 years, the trust is up some 97% versus the All Share up 20, and over 5 years, we're up 123% versus a 30% return for the FTSE All Share. So this sector that we're invested in, the mining sector, has a heavily correlated relationship with lots of kind of key things that investors should be thinking about. One of the ones that is on investors' minds today is inflation. Commodities have always done well in periods of inflation, particularly when inflation surprises to the upside. So for those investors looking for a way to capture some of the opportunities from the inflationary outlook that is now prevailing in the market, the mining sector is a clear place to look. We also benefit from growth in the global economy. The big plans that many countries are now rolling out to meet the net zero transition over the next 20 or 30 years will require decades worth of trillions of dollars being spent on infrastructure, and that is going to be good for commodities demand. And then the third thing to mention is obviously the relationship between the resources sector and China. China is the world's largest commodity consumer, consuming nearly 50% of most major commodities. And therefore, when China is doing well, the resources sector tends to do well. But that relationship is less linked today because of the strength in other economies around the world.